Silver is the cheapest asset on the planet, and add to that, it's an asset that does not carry a liability. It's not an asset that's been bid up with debt. It's been held down. It's got actually reverse leverage to it. It's been held down with leveraged pieces of paper sold against it. I mean, gold and silver are going to be your only lifeboats in a sea of liabilities. If the credit market sees up, you will not be able to buy goods at your local grocery store, your Walmarts, etc. The distribution system, trucking, shipping, they all rely on credit. Nothing gets done without credit. This is going to affect the real economy like nothing we've ever seen in our lifetimes.
Hey friends, before we begin this one, I want to let you know it's brought to you in part by our friends at Rugged Reserves. Their Patriot flashlight is a must-have. Just think about it. When you pack your bug-out bag, you want everything from a glass-breaking hammer to a cell phone charger to a flashlight to a wire cutter and a compass. Well, you can get all of that and more with the Patriot flashlight. Light up the darkness with 500 lumens that can be seen miles away. And there's an emergency strobe with 4 unique lighting modes. And now the Patriot flashlight even has an emergency siren. And you know what the best part is? It's solar powered. So this bad boy will always have power when you need it most. It really does make the perfect Christmas gift. Get one for your bug out bag, for your car, for your wife's car, for your home. Just visit patriotflashlight.com. I'll leave the link below this video and use promo code SGT20 to save 20% off your purchase. That's patriotflashlight.com. The link is below this video. Hey friends, welcome back. It's time for a very important U.S. economic collapse update. Actually, it's probably a global collapse update, but the economy is doing very well. So it's a real puzzler, and we have Bill Holter on to help us break it all down. Bill, how are you?
Good, Sean. How are you?
Good. Welcome back. I want to just ask you a couple of things here. Paul Tudor Jones sees really scary moments as Fed rate hikes trigger credit crisis. He says, we're going to stress our whole corporate credit market for the first time. There probably will be some really scary moments in corporate credit. And the backdrop against that, as you know, Bill, is our president saying this about the Fed tightening.
What do you think of the market sell-off today? Are you concerned about that?
No, I think the Fed is making a mistake. They're so tight. I think the Fed has gone crazy.
Bill, I'm going to turn it over to you for your thoughts on this. And, the thing is that needs to be said is that President Trump says the biggest threat to his administration is the Fed.
Well, first off, Paul Tudor Jones said there's going to be some scary moments. I would say there's going to be a systemic moment. This is not about. These are about dominoes falling, and corporate credit is just one domino. And you started off by saying, but the economy's strong. I would argue with that. I mean, just look at trade numbers. Look at shipping, the rates for shipping, the shipping numbers. The global economy is definitely slowing. There's no doubt about it. I mean, look at real estate all over the world. Look at the auto industry. The real economy is beginning to slow. And I mean, just look at China's trade numbers. They actually last quarter reported their first trade deficit in something like 30 years.
Yeah, but if we look at the United States, just for instance, Bill, you've got to give the president some credit here for his policies, right? He tweeted out on November 13th, boom, record high business optimism, need for employees at 45-year high. There are some good things going on with the U.S. economy as his trade policies have actually benefited the American worker and industry. And at the end of the day, you and I both know we wouldn't have gotten that out of a Hillary Clinton presidency. So can we give this president some credit where credit's due?
I think whatever vibrancy you're seeing, you can relate that back to the tax cuts. And I think that also affects the confidence levels you were talking about.
Right, but under a Clinton presidency, we would have gotten tax hikes. So really,
yeah, no, absolutely. I don't disagree with that at all. The toilet would already have been flushed if Hillary was president.
All right, we'll talk about interest rates. Talk about the national debt, the 10-year. Where do you see things headed in the near term?
Well, the 10-year has got resistance at 325. Every time each time, I think we've been there, what, 2 times or 3 times. Every time we approach it, you get another bout of weakness in the stock market. Jim, as a matter of fact, called 325 as the line in the sand for the 10-year. Interesting. One more rate hike, and you're probably looking at a completely flattened yield curve where the 2-year will trade to and maybe even through the 10-year. And as you know, inverted yield curve, flat to inverted yield curves are doomed for the banking system. It's always been a problem in the past with the banking system. Then you saw what happened in 2008, almost took the system down. And this time there's just so much leverage in the system. There's no central bank or consortium of central banks big enough to reflate this thing.
You know, Peter Schiff tweeted out on the 15th of November, we see signs of trouble, particularly in interest rate sensitive sectors such as real estate. As just one example, home sales in California have hit the lowest level in a decade, and it's not just California. You know, again, I think Trump is right. His biggest threat is the Fed. Can you and I both agree on that? Because, you know, probably if Hillary was in the White House, they would have kept rates at zero like they did for Obama. But because Trump is in there and he's a critic of the Fed to some degree, they're just going to raise rates until they kill the economy. Again, the bankers are the biggest enemy to humanity. Can we agree on that?
Yes, I agree that the Fed raising rates is obviously a threat. It's obviously, tightening or raising rates on a system that is more leveraged than ever before in history is lunacy. So yes, they are a threat to Trump. They are a threat to the system. But let's go back. What if the Fed did not tighten? What if the Fed didn't start tightening in 2016? If the Fed had not begun to tighten, where would the dollar be today? Then we'd have the same problems, but you'd be seeing the other side of them. You'd be seeing a dollar that's collapsed and massive goods inflation.
Well, let me ask you this then, as we think about the future. Let's stay with Peter Schiff for one more tweet. Also on the 15th of November, Peter tweeted out this. MarketWatch had some positive things to say about gold recently, calling it the best house in a bad neighborhood for 2019. What is gold telling us? Not a lot right now because it's still in the $1,200, $1,300 range. But more importantly, what is the silver to gold ratio telling us? My friend Chris Dwayne just did a video alerting people that the silver to gold ratio just hit a 25-year high. It's now at 85 ounces of silver for every 1 ounce of gold. And the only time it was higher than that was back in 1991. The ratio hit 99-1. Listen to this soundbite from my friend Chris Dwayne about the lunacy of an 85-1 silver to gold ratio.
There's this tremendous historical disconnect that literally humans are going to look back on and go, what were you guys thinking? In a world full of global digital illusions of wealth, gold and silver make up a minuscule amount of asset allocation into precious metals relative to all the other assets out there. And then even inside the gold to silver community, silver is so much more undervalued than gold, despite having tremendous amount of industrial uses that makes it the second most versatile commodity in the world next to oil. And we all know how important oil is. We can't imagine our lives without oil.
You know, he's right. We can't imagine our lives without silver either. How do you do circuitry? How do you do keyboards? How do you do solar panels? How do you do Tesla vehicles? How do you do batteries without silver? And yet 85-1, Bill? Good Lord, these silver mining companies, the precious few that are left, they're going to go out of business at these rates.
Well, and we've talked about this for years, Sean. The God's ratio is just under 10-1. In other words, silver actually comes out of the ground at 9.5 ounces of silver for every 1 ounce of gold. So an 85-1 ratio, that is a man-made ratio. Why it's out of whack or who's behind it, I'm not sure. Obviously, JP Morgan has a part behind it because they've been accumulating physical metal in the face of the onslaught of paper contracts being sold. And speaking of paper contracts, we've got another big move up on the COMEX in gold open interest versus inventory. They're now up to, I think, 358 paper ounces of gold, representing every 1 ounce of physical gold that they hold in inventory. Now they had the big run up. I think it was what, late 2016, where they got to 500, over 500 ounces or paper ounces to every 1 real ounce. That had dropped, and now it's working its way back up again.
You know, just staying on silver for a second longer, SRS Rocco, Steve San Angelo, came out with an article also on the 15th. Something's got to give: silver price versus silver cost of production. And he's right. Silver miners, all in sustaining cost Q3 2018. Some of these silver miners, the cost of them to mine an ounce of silver is in the $15, $16 range, with Great Panther being $19.74. Average all-in sustaining cost for top primary silver miners is $16.10 versus the current price of silver in the low $14. This manipulation by Wall Street and JP Morgan is absolutely killing the real world economy, at least as it pertains to silver miners. And then simultaneously, you and I both know we see JP Morgan hoarding silver at a rate never before seen in human history. I think they have the largest physical silver hoard on record. Are you following that data? What does your data show? Do you think that's true?
No, it's not the biggest silver hoard ever, because you had the Manhattan Project, which was almost a couple billion ounces. But in response to what you're talking about, Sean, regarding silver, silver is the cheapest asset on the planet. And add to that, it's an asset that does not carry a liability. It's not an asset that's been bid up with debt. It's been held down. It's got actually reverse leverage to it. It's been held down with leveraged pieces of paper sold against it.
So where do people turn, Bill? I mean, real estate, probably a good time to get out, not be necessarily buying real estate. What do you make of physical silver and gold as a hedge against calamity? What do you make of a 85-to-1 silver to gold ratio? Should people be buying physical silver right now as opposed to gold?
I don't have a problem with people buying silver in lieu of gold. You should have, I guess, some gold on hand in case you had to bug out. You can leave with wealth. But silver is going to far outperform gold just based on this 85-to-1 ratio. It's completely out of whack. I mean, gold and silver are going to be your only lifeboats in a sea of liabilities. That's what it's going to be all about, Sean, is there's going to be a mad rush to get out from under and or away from any liabilities. And gold and silver should be looked at as your savings account. They should be looked at as your bank account, because you can't wake up one morning and find out your bank closed and you got bailed in, or your bank closed and you lost all your money. There is no liability to gold nor silver.
I wonder how many people realize that there is a liability to holding fiat. Even if it's in your bank account, even if you're, not at one of these criminal banks and you're at a credit union, and yes, your money's FDIC insured, but the FDIC can't do anything about hyperinflation. If and when these fiat currencies begin to hyperinflate like we saw in Venezuela, then you've got real liabilities for holding your fiat. I want to read this from Alexander Trudeau over at Gold Silver. He writes, "Central banks and governments will keep issuing debt until the system collapses. I know this can't go on forever," he writes. "This must be the nagging echo in the back of every politician's and central banker's head as they proceed down the incredibly long debt-paved road, arm in arm with their borrowed money, betrothed to where exactly? And this is where the limitations of our species come to the fore. If something didn't happen in our lifetimes, if we haven't personally experienced it yet, we have a very hard time internalizing the lessons of the past in any real way. I know the Great Depression happened. I know World War I and II happened, etc." He's talking about normalcy bias there, Bill. Most people in this country haven't lived through exceptionally hard times. And very precious few in this country are alive to have ever said that they've lived through hyperinflation. But that's what he's saying. One of these days, the issuance of debt will lead to a system collapse around the world.
Well, he's absolutely right. Sean, people are continually ask, when is this going to happen? And I just keep telling people, open your eyes. It's happening right before your eyes. You're watching the credit unwind happen. And you have some very serious problems in the Chinese market, the shadow banking system. Credit growth is no longer there. And the bottom line, in a fiat/fractional reserve system, either credit grows or it's game over. It's Richard Russell's inflate or die. And you're looking at, I termed this phrase back in 2007, and it was regarding basically the average person and real estate holdings and things like that. I termed it debt saturation. And that's where we are on a systemic basis, only this time it includes sovereign treasuries and it includes central banks. There's no ability to add more debt to the system and for the system to still function. I mean, just look, for example, look at the US, look at the interest expense. All of a sudden, that's exploding after staying within the bounds of 200 to 400 billion a year for 30 years. What they did was piled more and more and more debt on and continually lowered interest rates, so the debt service number never changed. Well, we got to 0 or close to 0% interest rates, and the debt continued to pile on. Now that rates are going higher, we're up to 550, 600 billion debt service for a year. It's soon going to eclipse the defense spending. And before you know it, we'll be at $1 trillion a year in debt service. Before you even open the doors, you know you owe $1 trillion for the year. I mean, it's mathematically over.
Yeah. Yeah, you just said something very important. I want to make sure people heard that. The borrower is slave to the lender. And you just said that our interest payments on the national debt are now nearing 500 to 600 billion annually. Is that right?
Yeah, it's 550. And this coming year, I imagine you'll see it somewhere in the between 6 and 700 billion for the year.
Yeah, okay. So there is absolutely no way this ends well, especially if the Fed keeps raising rates, because as the Fed raises rates, the interest payments on that debt go up. And we already know that the debt continues to go up year over year, almost exponentially, certainly under Obama, and Trump hasn't done anything to slow that train.
No, I mean, the last year, the increase in debt was 1.2 trillion.
All right. And I read recently, too, I think it was Gunlock who said both corporate and high yield bonds are at or close to their most extreme levels of overvaluation historically.
Well, Sean, you had all over the world, you had central banks, Bank of Japan, the ECB, they bought all sorts of bonds. And basically brain dead companies were able to borrow money or refinance and continue. So what it's done is it allowed, if you want to call it brain dead companies, it allowed them to stay in business for a longer period of time. And the overvaluation, what he's talking about there, the overvaluation, once that comes back to the mean, you're talking massive margin calls, you're talking forced liquidations, and don't forget, a lot of corporate debt is held by insurance companies, by pensions, etc. What I think going one step further than what he said is the collateral base is about to take a huge hit.
Let's talk about liquidity, too. What happens when there is no liquidity? We've seen that happen in cryptocurrencies. We've seen it happen in some of these stock market corrections where it falls 600-700 points in a day. It gets real scary if you're holding on to Amazon at 2,000 and a week later it's at 1,500. Let's talk about what happens when people need to sell, but there's no buyers left, Bill. So the stock market's had a tremendous run up. Trump loves to talk about stock market always hitting new highs as though that's some panacea for the economy, when the average guy is not really benefiting from a rising stock market. It's the elite that are benefiting from that. But let's talk about what happens. How does this house of cards end? If there's no liquidity, you could see a stock market collapse in earnest, couldn't you?
Yeah, and it could be a short-term, very severe event. And I was a broker in the 1987 crash. And back then you had market makers that theoretically were supposed to provide liquidity. And when the market makers backed away, that's when we had the 23% Black Monday. Where we stand today is different from the standpoint of there's so much more debt woven throughout the system. Everything is carried by debt. And if liquidity dries up, and it is showing signs of drying up all over the world, if liquidity dries up, then nothing functions. And you're pointing or concentrating on the stock market crash. Far more important than that is if the credit markets seize up. And I've said this for, 2 or 3 years. If the credit markets seize up, you will not be able to buy goods at your local grocery store, your Walmarts, etc. Because the distribution system, trucking, shipping, you name it, they all rely on credit. And so do producers, so do farmers, so do automakers, you name it. Nothing gets done without credit. So yeah, the stock markets will crash, but this is going to affect the real economy like nothing we've ever seen in our lifetimes.
Let me ask you this. Let's get back to the Fed. I was going to ask you about, the possibility that Trump could disband the Fed, end the Fed, and return the power of the printing press to the Treasury. We can get your thoughts on that, but let's stay on this fight, this war between the Fed and Trump. Trump has been criticizing the Fed. We would have never seen that out of Hillary. No president ever criticizes the Fed. The Fed is a privately run criminal bank, and every sitting president knows it. I believe the Fed probably was behind taking out our President John F. Kennedy to some degree, and certainly they were behind, I think, taking out Abraham Lincoln. The Fed is a criminal organization that should be ended today. But this war between the Fed and Trump is very real. We have Greenspan saying just the other day, Trump's tariffs are insane. Now, every time I hear somebody in officialdom, somebody like Greenspan or anything on CNN or the guests on CNN criticize Trump, I usually know the opposite is true. What are your thoughts on Greenspan essentially attacking the president over these tariffs?
Well, obviously, Greenspan is looking at Trump as someone who is pushing on or pushing against the Fed. And yeah, there are stories out there, will President Trump end the Fed? But think about that for a minute. What actually happens if the Fed gets ended? I mean, there's all sorts of problems with that. First off, if the U.S. is going to issue money, and let's say that we do go back to constitutional gold and silver, well, we better have some gold and we better have some silver. And what we don't have is going to have to be made up in marking the price up. But going further, think about all the debt, all the contracts, everything outstanding that's dollar-based, and all of a sudden you end the Fed. I mean, you're talking about central banks that hold, 65% of their reserve assets are dollars, and all of a sudden you're going to end the Fed and those dollars go poof. What happens? And I don't see, the only way you could end the Fed is if you come out with a new currency, but the upheaval will be unlike anything the world has ever seen, because there's just too many contracts. Think about it. Your insurance, your insurance companies, your banks, your brokers, etc. Anything that you consider an asset that's in dollars, it's no longer an asset, right?
Right.
So I don't know. I can see another currency or currencies coming, and I do believe there will be some type of ratio backing by gold and silver, but I don't see, without having something in place to pick up the baton, I don't see the Fed being ended. And no matter what's in place, if the Fed were ended, it's still going to be absolute financial destruction, because the majority of like I said, central bank reserves are in dollars, and dollars are used so heavily in trade. I think the upheaval will be beyond anything we can imagine.
You know, you said something I want to just circle back. You made the mention that if Trump were to disband the Fed and introduce some sort of new U.S. Treasury-backed currency, then it better be backed by gold. The gold better be there. Were you referring to Fort Knox, and where is the gold? Do we have the gold that the powers that be say we have? Is that what you were referring to?
Yeah, and I am a firm believer that the gold is gone, and whatever gold is there is pledged somewhere, somehow, to someone.
Well, I was, yeah.
And Sean, look at, I mean, just what was it, 14 tons or something like that of gold that Venezuela wants back from the Bank of England, and they say no. Really? I mean, looking at that, there's no way that they're not shipping the gold back because of sanctions. In a world with a true rule of law, they would already have their gold. But it's just like the German gold that took us 3 years or 4 years to ship to Germany. The Bank of England probably does not have that gold.
Right. It's all hypothecated and rehypothecated, loaned out. The books are probably an absolute mess. The gold may be sitting in certain vaults, like at the Bank of England, at the New York Fed. There may even be some gold at Fort Knox, but it's all
How
been
about the
loaned
Bank
out.
of
The books
China?
are a mess.
How about the Bank of China? Could some of the gold be sitting there?
Yeah. How about the Bank of Rothschild? How much of it is sitting there?
Oh,
Let me read this to you from King World News. Whistleblower Andrew Maguire says synthetic gold short bubble now bursting as Deutsche Bank and others buy large amounts of physical gold. London whistleblower and metals trader Andrew Maguire says the action is just noise as synthetic non-deliverable gold bubble is now bursting, and that is why Deutsche Bank and other European banks are now buying large amounts of physical gold. Deutsche Bank, as you know and I know, it's been on death watch for several years here. It's a dead bank walking.
right.
If Deutsche Bank is buying gold, boy, that's a smoke signal people ought to pay attention to.
Well, Sean, to comment on the synthetic short on gold, and we've gone over this many, many times. The bottom line is when this thing blows up and people who believe they own gold find out, no, they don't own gold. The gold was never there, or it's not there for their taking or getting now. Gold and silver are going to go to prices that, for instance, you hear somebody say, "Oh, gold's going to 5,000 or 10,000." Those are ridiculously low numbers. When this thing bursts wide open and it becomes cash and carry, and the credit system has collapsed and currencies have collapsed, the only question is how many zeros are going to be after the number for both gold and silver.
You know, we've been talking about this for so long, Bill, that it sort of defies belief to see silver down in the 14s and gold in the 1200s.
It
Doesn't it?
doesn't matter what the price is, Sean, as long as you have it, as long as you have ounces either in hand or you put them into a non-bank private vault. It does not matter what the prices are right now. The prices are they're fictitious. And like I said, when it becomes a cash and carry market, there's going to be literally wheelbarrows uh, of dollars, yen, euros, whatever, being carted in to get 1 ounce of gold or 1 ounce of silver or whatever. I mean, we are looking at a complete collapse of fiat currencies, and you cannot put a price on gold. You cannot put a price, a future estimate price on silver. You can't do that because we have no idea how much fiat is going to be printed to try to right the system coming down, and the reflation will not work.
Before we part ways, Bill, I want to get your thoughts on one last thing. I've been doing quite a bit of coverage lately on these California fires. I believe that these fires are to a large degree contrived. I don't believe that it's just the ineptitude or incompetence of the leadership at PG&E that's leading to these fires. We're seeing the same thing repeated over and over. We saw the October 2017 fires. Some of those fires have now been deemed as being caused by PG&E power lines. Now the same thing appears to be happening with this Malibu fire. They're calling it the Camp Fire, Bill. You got to love this play on words. The Camp Fire destroyed Paradise and Malibu. And then you find out that key leadership at PG&E is Rothschild insiders. Rothschilds control PG&E. Here's my question. Oh, and by the way, criminal Governor Jerry Brown signed a bill in September allowing utilities like PG&E to charge their customers for the cost of the lawsuits and payouts that are coming for this negligence, or as I've argued, malevolence. Here's my question. Come full circle here. We talked about the health of the U.S. economy in the beginning. Here's a red flag. And just another way these bankers have a way to bring us to our knees. California, if memory serves, is the 7th largest economy in the world. Are you telling me that these fires that are gutting many, many thousands of homes and businesses, you telling me these fires aren't going to negatively impact the economy in California? And I think it's by design. I think it's all Agenda 21 type policies. Get people out of the suburbs and into these huge megacities. Because you know as well as I do, what's going to happen is people are going to get their insurance checks, and the insurance companies are going to say, you can't rebuild here. We're not going to insure you because it's just too risky. It's the new normal, they keep telling us on the news.
Well, Sean, let me give you some firsthand on that. Back in early September of 2011, we went through a wildfire. Our little community of 6,000 people, there were 1,700 houses that were burned down in 2 or 3 days. And I can tell you what happened in the aftermath of that. Obviously, it was chaos. Local business initially slowed to nearly a halt. But what happened was, you're saying that the insurance companies won't let people rebuild. Insurance company, I'm just telling you what happened here. People rebuilt where they lived left and right because all the trees were gone. I mean, we lived in an area, they called it the Lost Pines, which is a huge amount of giant pine trees. And they exploded in a high wind fire. It was 6 miles wide and 35 miles long. But after the fire went through and people did get their checks, people rebuilt in many instances, rebuilt in place. And I can tell you, for a good 2 years after that, the local economy was very vibrant because you had houses being built left and right.
Yeah, and I can see how that might happen in a state where the Agenda 21 policies are not trying to be are not being implemented in earnest. Here's my thesis. Keep your eye on California, because I bet you that the insurance companies, many of which are probably Rothschild and banker owned anyway, are going to come around and say, well, here's an article I just found as we're talking, I Googled this, USA Today. California's fire dilemma. Rebuild knowing same homes will burn again. See, this is my thing. You're not going to be able to rebuild paradise the way it was, according to the Sacramento Bee. And the bankers love it because they want people out of the suburbs and they want to rewild California. And, where California goes, so goes the country. I'm trying to give people a heads up here. They're going to need to fight because I think we're at war with these bankers. I made the point in my last video, Space Weather, Rothschild, and Agenda 21. The people of California, Bill, are being targeted. I don't think that these fires, these new unprecedented fires, as they're being called over the past couple of years, I don't think that these fires are accidental, to be honest with you. I think that's my bottom line thesis.
Well, you could be right, Sean. My thought process is the financial system is going to come down long before the effects of moving people out from the suburbs and into cities. I think the financial system will occur long before that's done. I think it's here and now. I think the financial breakdown is right here, right now. You're watching the credit unwind. You're watching history happen.
All right. Well, that's not great news. I guess the best news that I can share for you folks is that it's sort of where we started with that bite from Chris Dwayne. Silver in physical form right now is about $14 an ounce. I mean, you can't, Bill, honestly, we've been talking about this stuff for a long time, but I never, ever dreamt back in 2011 that you and I would be talking in 2018. As we're very rapidly nearing 2019, I never dreamt that silver would be at $14 an ounce.
Well, like you said, it is literally at or below the cost of production. So at this point, buying silver is little to no risk.
Yeah. All right.
If you buy a house at or below the cost of construction, at some point in time, you're going to be able to sell it and make a profit.
Yeah. Oh, hey, as we're talking, I Googled another article here, so I got to share this with you. I think it really backs up my thesis. This is from August of this year, so several months before these latest fires, the Malibu fire, they're calling the Camp Fire. Homeowners dropped by insurance companies scramble for coverage as fire season heats up. So there you go, Bill. That's the bottom line. California's fire season is in full force, and some Ventura County homeowners are grappling with more than just record high temperatures and wildfires. Several residents in some of Ventura's brush-heavy counties have been dropped by their insurance companies. They've been notified that their homeowners' insurance policies will not be renewed because their homes are too close to brush and the risk is too high. Unacceptable fire risk is what the insurance companies are saying. This is the new, Bill. Can't get your house insured, and how'd you like to get that notice in the mail, Bill? You got dropped by your insurance company 2 months later. These massive fires come through and destroy your property. So not only are you not going to be able to rebuild, you're not going to get a check for what you lost.
Right. The insurance companies front ran the fires.
Yeah, I'm telling you guys, this is Agenda 21 policies. If you're not familiar with United Nations Agenda 21, look into it, research it, get active, and get vocal, because if you live in California, you are being targeted. Bill, thanks so much for your time. I really appreciate it. And shout out the website, jsmindset.com, right?
Yeah, thanks for having me again, Sean. Our website is www.jsmindset.com.
All right, guys, and there's some really great content there. Some of it is subscription. A lot of your content over there is subscription only, correct?
Yeah, we have a public side, and then I write 2 or 3 articles a week, and then Jim, myself, and a friend of ours, Dave, we do a weekly podcast over the weekend. Generally lasts about an hour, so it's a wrap up of the week and what we see coming. Some pretty good insight in those talks.
All right. Well, very good. Guys, head over to jsmindset.com to learn more, perhaps subscribe. Our guest has been Bill Holter. Bill, thanks so much.
Thank you, Sean.
All right. And guys, thank you so much for tuning in. We very much appreciate your support. A shout out to our patrons over at patreon.com, making a world of difference for us. Thanks for keeping us in the fight as CNN pays Anderson Cooper $12 million a year to spew lies to people around the globe. And thank you so much for visiting us for real news 24/7 at sgtreport.com, the antidote to corporate propaganda. Have a great week ahead. God bless.
They believe there's power in these rituals, and this is what we call cult level spiritual warfare. They summon demons and then they send them. not only do they have power politically and in the media, but there is a supernatural power that they are accessing.